Hello everyone and welcome to today's daily major markets update for Wednesday the 10th August 2022. Upside surprises and downside disappointments. Those are the hallmarks of a bull market, and it sure looks like we have that pattern currently in place. It was a little bit stressful before this update because stock charts was down. It didn't want to load any of the charts. So I've not been able to get everything updated the way I wanted to. So I apologize, but this is outside of my control. And please note, there will be no update tomorrow. And Friday's video update will be sent out on Saturday because I am unavailable over the next 2 days due to travel. Meanwhile, let's have a look at the charts and see what we have, because remember, we're dealing most likely here with extensions of third waves. They can always happen. You start off with the known unknown, that is that we expect a third wave to go to ideally 161.8% extension of wave 1, measured from the wave 2 low. That doesn't mean the market has to do that. It can stall at 138.2, or stall at 123.6, or it can extend to 176.4, 200, 223.6, etc., etc. You do not know that beforehand. Nobody knows. Of course, we apply some technical analysis on where support and resistance. So those and trend lines and simple moving averages, which can act as magnets for price, and then you try to overlay that with your Fibonacci extensions. But in the end, once a third wave or a C wave gets going, you start off with the known unknown. Saying it's going to go to 161.8. That's your anticipation. You monitor for it and you adjust accordingly when things start to move away from it. And in this case, that's what we're seeing. Not on all indexes, but especially the IWM and the let's see, the NASDAQ and NASDAQ100 are doing that. That happens. That's okay. That's bullish. How to trade it? Well, as I said, once target zones are reached, you can either sell some of your holdings, raise stops, those good things, to make sure that you can still enjoy the upside. Or you sell everything and you just simply buy the breakout. So there are many ways to go about, or whatever strategy you have in place, to make sure that you can capture the breakout as well. Because again, the market does not have to do what I want it to do. It doesn't owe us anything. That doesn't mean my forecast is wrong. That doesn't mean I'm just moving the goalpost. No, not at all. You start off with this known unknown. Let's have a look at the 161.8. That's the next one. And then you say from that one, we expect it to go to the 100%. From that one, we expect it to go to the 200%. That's your expectation. You track it, you monitor it, and you adjust accordingly when things start to move higher or lower. And all of that can be easily captured with Jesse Moore's 21 trading rules, because in the end, I'm only 70% reliable. Everybody is. We all make mistakes. We're all human. That's why you cannot forecast every single move in the market correctly. Okay? But if you see upside, then you have to forecast for upside. Some household items, ways for you to make money. And now let's have a look at the charts. I just really want to reiterate that because it is something that a lot of people struggle with. But, here's one that we nailed. So far, so good. I was looking for this smaller fourth wave and then a fifth wave. Apparently today or yesterday was all we got for this minute 4, and we should now be minute 5, targeting the 161.8 extension, ideally. Note where the 200-day moving average is, okay? We're still a little bit below it, so I think by the time we get there, we're pretty close to the 161.8% extension at 33,737. So let's make that 33,750 plus or minus 50. That seems a very reasonable new upside target for this wave 3C. Then we should see a pullback and then another leg higher for ideally a full standard impulse pattern. So nothing out of the ordinary, so far so good. Wave 4 here was simply a little bit shorter than I anticipated, but that's fine. We take it as it is. Otherwise, the structure looks good. So here is a wave which is extending. Originally, this was what I had, which matches really well. We had this wave 3C, and then we should be in wave 4. Well, we got pretty close to the ideal upper end of this wave 4 target zone, but not by much. So one can then adapt the wave count to a more extending third wave. So we have 1, 2, or A, B to be determined. 1, 2, 1, 2, and then 1, 2, 3, 4, 5. The subdividing wave 3 of 3. This means that now that we have well surpassed the ideal 161.8% extension, this is most likely a third wave which is extending. This shows you that yes, we will reach the upside target zone, but we can also break out. So please keep that in mind. So the next target zone is then 13,800 to 14,000. That's what I'm looking for. Then a wave 4 pullback and hopefully another wave 5. And this way also the NASDAQ starts to align with the Dow Jones a little bit better. Up, down, up. And then a larger pullback and then up again. I don't know why stock charts move this one here, but this should of course be somewhere here. If we break below 12,900 at any time, then we have to look to 12,100. But I think that's going to hold because it held yesterday. Semiconductors. I was looking for a bounce yesterday, and that's what we got. So far, so good. So I was looking for higher prices. And now we have to see if the semiconductors want to stall somewhere around this level of around 3,000, 3,050, and then do another leg lower. Wouldn't surprise me if that's the case. Remember, B waves don't have to do 50% or 62%. They can become irregular as well. That's always the trick with B waves, but so far so good. Caught the upside in the sense that I was looking for a bounce, and that's what we got. So that's pretty good. And now we'll have to see if we can move lower. If we make a new all-time of a new uptrend high, that doesn't necessarily mean the alt wave count is in play. 1, 2, 3, 4, 5 could also be an irregular B wave. To me, it counts better that this rally that started here early July has completed 1, 2, 3, 4, 5. Why? Because we had 3 down days here pretty much. We had 3 down days here also. So time symmetry wise, this looks much better as a 1, 2, 3, 4, 5. And now we could be in a irregular flat wave 2/B. But again, so far so good. Yesterday, I was ideally looking here for 28.20 to about 27.50. Filled it, maybe overnight futures. I think we got there a little bit, and off to the races. So far, so good. S&P 500. Well, this one has been a little bit difficult to track over the last several days because of this nightmarishly overlapping price action. If you go back 2 days to Monday, I had that we either topped here for green wave 3, and we're now in wave 4, and then that the low was alternatively this blue wave 4 of this ending diagonal wave 5 of 3. Seems like we have this ending diagonal. It's a little ambiguous price action, but higher is higher, and it looks like 42.25 should now be next. That's the next upside target. We can still extend higher. There's no reason why we have to stall at 161.8. That's the ideal target, so that's what we anticipate. Then we eventually have to see lower lows on a daily closing basis. Now, yesterday we definitely went below what I would see as a normal, good-looking ending diagonal. So then you have to make a judgment call. Okay, the judgment call is, you know what, it starts to break below this pattern. Most likely it is not a ending diagonal. Then yesterday I said, well, we should then be in a B wave, bounce to about 41.60. That's what I placed on the chart. And boy, did we get that already at the open. We opened at 41.80. So the direction was good, of what I anticipated yesterday, similarly to the semiconductors. It's just that I need to refer back to the alternative wave count I presented on Monday. This is the inherent short-term variability we have to deal with in the markets, and especially when we get this type of overlapping price action. This is pretty much up, down, up, down, up, down, and we have almost 2 weeks of no progress. That makes things harder to analyze. So this still looks pretty good here. We could have a 1, a 2, a 3, a 4, and now in a 5. If we go with above 42.25, I think we're going to target 43.50. We now have to break below yesterday's low. It's about 41.10 to tell us that this wave 4, as anticipated, is underway. I still anticipate the wave 4, just as I do for the other indexes. Okay, but shorter term, it looks like we're in this last wave higher for wave 3 of 1/A. How are we doing for the IWM? Well, here also we have continued extensions to the upside. Yesterday looked really nice after Monday's, I would say, bearish reversal candle that looked like a nice island reversal we had. Today proved me completely wrong. So then I have to reassess my work. Got the Dow Jones right, semiconductors right in the sense of more upside. So that's good. You cannot get every single index, every single move correct all the time, especially on the shorter term. So I've realigned also the IWM with what I'm seeing with the other indexes, a 3, a 4, a 3, a 4, and a 5. That would fit here reasonably well with the other indexes. Doesn't have to be exactly the same. So this is a adjusted wave count, 1, 2, 1, 2, 3, 4, 3, 4. We have extended well above what I would normally view as a nice wave 3 target zone. Last 3-4 days were pretty close, but the market simply did not listen in the sense that it did not do a ideal Fibonacci based pattern. Doesn't have to be. So now we broke out, and that's bullish. So we're going to look for more upside for this wave 5, a 4, a 3, a 4, and a 5. That's my preferred pattern. Then if we look at the, let's see here, daily chart for the S&P 500, the two options that I'm tracking. So the first option is here, this 1, 2, 3, 4, 5 of this new impulse to new all-time highs for the S&P 500. Again, we must stay above 3250. So far, so good. We're moving away from it. And we have to rally above 4175. Did it. Step 2. And now we need to get back above 4700. That's still a tall order, but we have now checked off 2 out of 3. So I like it, with, of course, the alternative option being that we have this A, B, C pattern in play. This A wave here in black can, of course, comprise of 5 waves. A waves are either 5 waves or 3 waves. We don't know yet. So here I'm tracking a simple 3-wave A wave, but it can become a 5-wave A wave. And that's why I've labeled this, of course, as 1/A, if we get the 5-wave sequence. We don't know yet if it's truly going to be an impulse. If we do get an impulse higher, the preferred view is that that is wave 1 of wave 5, with wave 5 eventually reaching the 5,000 plus region, okay? So we also know after 5 waves higher, we will get a larger 3-wave pullback, which is going to be a fantastic buying opportunity, because we then must expect another leg higher, either wave C or wave 3. Okay, after 5 waves up, that would be 1/A, expect B/2, and after that, we must expect, based on Elliott Wave rules, wave 3/C. So shorter term, downside risk is still there for this wave 4, but I still think we are in a intermediate term to potentially longer term uptrend. Okay, that is what we're looking at. So every single scribble can, of course, never be analyzed correctly, but that's what I'm looking for. I'm still looking for this wrapping up of this green wave 3, or here as well for the IWM. Same here for the NASDAQ100, same here for the Dow Jones. So I think with today's price action, the indexes are better aligned. I like it so far. So I'm looking for more upside for all indexes. The semiconductors are the ones that do look the weakest based on the pullback we got late last week, early this week. We can get an irregular B wave, but the B wave so far, the bounce is doing what I thought it would. If we make a new uptrend high, then the alternative is that we are subdividing higher as a 1, 2, 3, 4, 5 versus a irregular B wave. Can't really tell the difference because of some of the pullbacks that we've had, but this here does look like from the wave 4 low here made late July, like a nice ending diagonal. So that is a wave 5. This is not a regular standard impulse. This is more of a diagonal, which is always in a 5th wave, not in a 3rd wave within a impulse. Of course, it can also be in a 1st wave, but considering where we are, so I still prefer the A, the B, the C path for the semiconductors. We'll see if that pans out. Again, I cannot get every single index correct. Dow Jones looks good. NASDAQ subdividing higher looks good. Upside targets are on the chart. Semiconductors still looks better, like a bounce. S&P 500 can still move higher above 42.25. We're going to look for 42.50 plus. IWM should also subdivide higher. And please remember where we are in the bigger picture. Either a new impulse to 5,500, or we are still only in the A wave of a larger B wave bounce. To be determined, but even in the larger B wave bounce, the C wave is, of course, a nice money maker, which would then potentially turn into the 3rd wave for this wave 5 of 5. The super cycle 3 top will then be moved forward in time and also moved higher in price, because it could have been topped here in January of this year, but we can move it out as well. The market still has that option available. We'll know soon enough. I'm not concerned about it. So with that, take care, trade safe. No update tomorrow. Video update on Friday will be delivered on Saturday. Thank you so much. Take care, trade safe. See you all on Saturday. Bye.